What's up, guys? It's December 19th, 2024. 6 days till Christmas. Merry Chrysler. That's a super old meme. Yeah, so I don't understand if this bar's supposed to have the gap up. It hasn't corrected itself. I've done this like 3 days in a row. So the 16th is here. The 16th is here, and then the 17th is below is a gap down. Wait, I wonder if I change this to the daily. Okay, yeah, so that's what the chart's supposed to look like. Why is this daily chart not? It's is that's the E-mini. That's so weird. 16th has a gap up on this chart, but I know how to fix it. I'll just do it later. I'm just gonna copy and paste the 5 minute over there and then do it to daily and then save it. Yeah, but anyways, so let's just look at the daily chart here. Daily chart, we have a contracting triangle, and it broke out far below the EMA. Bears got a gap, so I'll add that gap on the daily chart later. Got a gap, and they got follow through, so that's interesting. Are we going to pull back, or are we going to get some momentum down to the range? We don't know. We did have a rally overnight. That was the overnight rally. Now I'm flipping the dip in between charts. We had a kind of an overnight rally. It wasn't that much of a rally. We kind of went around 6,000, sold back off another 40, 60 points. 15-minute chart, there's that gap. And again, gaps show what side has pressure. So if there's open gaps, we're in a trending market. If the gaps are closing, we're in a sideways market. See how this gap stays open? This is the range lows. This is a swing point. And this gap stays open. Today's gaps, they all got closed. So that means it's more range bound price action. It's important we read the markets from a consistent perspective, and that will slowly ingrain into our subconscious. So, market cycle, right? I always talk about the market cycle. We had a breakout. Bar 59 starts the channel phase because it's the opposite bar. Then we get 3 legs lower. Leg 1, pull back. This is a rough drawing. Leg 1, pull back. Leg 2, opposite bar, pull back. There's a hidden leg 3 right here because bar 71 breaks the high, but let's just, for this conversation, leg 3, pull back, leg 4. So the market cycle goes breakout, channel, trading range. We got the breakout, we got the channel, and we got the trading range. So this is the entire market cycle. We are looking at the market cycle right here, guys and girls. Trading range days are hard. I'm sure some people, I didn't trade today. But I can tell you in the past, I would have FOMO'd this and try and swung short the entire day and got chopped up. That's why the market cycle is important because it keeps us on track. And the stock market is not predictable, but it helps us align our intentions. So if today sold off, we say, okay, we're still channeling. Today went range bound, so now we know, okay, we're in breakout mode. I've talked about this quite a few times. I'm sure you guys are getting tired of me bringing up the gun in a box, but if this is momentum from the breakout and then we go range bound, typically we get a breakout on the same side. However, we did we did go range bound for more than 20 bars today. But if you look at every pop above the EMA, it got sold. So we'll let the price action tell us what to do. It's interesting to see. The market cycle tells us we're in breakout mode with a little more selling pressure. We are in bear territory, being below the higher time frame EMA. This is the 20 EMA on the 5-minute chart. This is the 45-minute EMA plotted. This is a 20 EMA on the 45-minute. This is a 45-minute 20 EMA plotted on the 5-minute chart. So yeah, we have a gap up with continuation, kind of deceiving. Makes you think we're going to get on that full-on reversal. However, bar 2 gets sold, and we get a 4-bar microchannel. This is my favorite setup, bar 6 being the first reversal. Price action is fractal. So that means that we can have big market cycles and little market cycles, right? So here we have an overall big market cycle that spans over the higher time frames that I just explained, channel, breakout channel, trading range. And then even within today, we had the market cycle. So we have bulls trying to get a breakout above the EMA and fail. And bears go for their breakout. So we get the breakout. First opposite bar, bar 6 starts the channel phase. Leg 1, pull back, leg 2, pull back, leg 3. What happens in leg 3? The same thing that happens in this leg 3. The market goes sideways. Here we got the leg 1, pull back, leg 2, pull back, leg 3, and the market went sideways. So you see how the market cycle continuously is. That's what fractal price action means. Is the same thing is happening on all time frames. Below the smaller time frames, the higher time frames, you can't have it. It's just the way the game goes. Whether you want to believe it or not, I'm sure there's some indicators out there like whatever. But to me, I like reading price action and the market cycle and leg count pretty much tell you where you are. And then depending on the market cycle and leg count, that's how we place our trades. I like to call myself a breakout trader, so I focus on the first half of the market cycle, break out a channel. And I am starting to learn how to scalp in a range, but just to keep things simple, I'm a breakout trader. Trade breakouts. Didn't trade today, but bar 6 would be my type of trade. Bar 10 would be my type of trade. I could see myself getting trapped down here and hitting out. I might even buy this, looking for a new reset. Then I hit out, I get short around here. I don't know. It's hard to say if I'm not trading. The chart's printed, so it's not fair to say what I do. Anyways, gap up. 1, 2, 3, 4. 4 bar market channel. Bar 6 is being pullback. First pullback. Bar 7 creates bar 7 and 8 create that leg 2. Now we're going deeper into the channel trading range phase, and then we get that bar 9 big deep pullback testing above bar 7, and then we get another 4 bar mirror market channel breaking out below the range of bar 8. However, so this is where we manage our expectations. We've had 3 legs lower, leg 1, pull back leg 2, pull back leg 3. Yes, this 4 bar market channel got continuation, but why didn't this one? Technically it did. Bulls got 2-legged pullback right here and it sold off. Barely, it made a double bottom. So technically it did get a second leg. But since range bound price action breakouts tend to fail, you're gonna have to scalp out. So leg 3, pull back, leg 1, pull back, leg 2 for the bulls, and then we go range bound. Bears sell off until low. Bar 19 becomes a sell vacuum and we go sideways, creating a double bottom in a trading range. Bulls also have this gap up. Bears definitely wanted to close the gap and see lower prices below bar 80 yesterday. Yesterday's bar 80. Double bottom, leg 1. So excuse me. Leg 1, pull back, leg 2, sell off. Bears have a leg 1, pull back, leg 2, pull back, leg 3. Sells off, wedge bottom and support, and that rallies. Leg 1, 26 breaks a trend line, pull back, leg 2. That creates its second leg, and then they fail to get a third leg because we are in bear territory. Sells off, leg 1, opposite bar 30, leg 2, pull back, leg 3. Now look at this rally. How could we have caught this rally? Well, we're at trading range lows. Bar 43 is a failed breakout, and then we rally. Leg 1, opposite bar, pull back, leg 2, opposite bar, pull back, leg 3, opposite bar 54. In trading ranges, we have buy vacuums, or we have vacuums in general. So vacuums look like breakouts, but the context says we're in trading range. So that means it's a vacuum, and a vacuum is just testing support or resistance. So you could say the vacuum behavior started around here, started here, we vacuumed up, vacuumed down here, we vacuumed up here, and we start to get breakout behavior, but we're in a trading range and it doesn't get too far. So delayed second legs. Second legs happen in all time frames, which is why I like to trade them. They happen differently depending on the context. Here is a little bit of momentum, so you have some room to short lows. If you short here, you sit through a pullback, maybe you average it and your price is at 50%. It's not a bad play, but just be cautious. That is more, I don't like talking about that. I do it very seldom, but that's a scary thing to do. If you average into longs here, you're gonna get crushed. Averaging in is more of a trading range tool. I think of averaging in like a hammer, and you gotta, you use a screwdriver for a screwdriver, you use a hammer for a nail. You don't use a hammer for a screwdriver, but you could, okay, caveat, you could set a screw with a hammer and then drill it into that. Now we're going beyond the scope of this video. So you want to use the right tools for the right job. I don't think there's anything wrong with averaging down in trading ranges as long as you understand what you're doing. Because if you average down longs here, it's a problem. If you average down shorts, you maybe short this spot, or you short bar 67 and then you short high here. That's not a problem. You're in a breakout mode. You should have a relief. You short here, you short here. That's also good. You're in trading range. But let's say you buy here and you buy here and you buy here, you're gonna be in some trouble. So I don't talk about it too much, but a lot of you are returning people that trade price actions, so the Brooks methods and Ali Monasari's methods. So that's part of our as long as you understand the context, you can do what you want. Just that's why I like price actions, because there's so much freedom once you understand what you're doing. Back to the charts. I was talking about delayed second legs. So maybe by here, you're in a trading range. You get you could scalp out. I don't recommend it in a bear territory, but you could also buy trading range lows and get out here at your original entry. So you buy this bar, you get trapped. You buy the swing low, failed breakouts, and then you get out here. Your price line will be in the middle, so you make this much profits, and you get out your original entry. Trading ranges have delayed second legs, leg one, deep pullback, leg two, and then same thing with the bears, leg one, deep pullback, double top, leg two. So leg one, the swing low is here, pullback, leg two, on a different time frame. That's kind of showing it. Okay, there you go. 45-minute time frame. Even you can still see it through the bar number 3. But there's that deep pullback. Leg 2 waiting there. And even this leg gets leg 1, pullback, leg 2, leg 1, pullback, leg 2, leg 1, pullback, leg 2. Deep pullback, testing bar 3's high. So yeah. And then let's talk about this last piece of the leg puzzle. Bar 54 is the buy vacuum testing resistance. It sells off. Excuse me. Bar 54 is testing resistance. It's testing bar 26 is high. The bulls that get trapped up here are now going to sell out of their longs, and bears are going to sell resistance because they know they're in trading range, and we get a 3-bar micro channel. Again, this is what I like to see: 3 bars and then a pullback. Bar 59's tail looks like the leg 1, pullback, leg 2. However, it closed bullish, so you could say leg 1, pullback, leg 2, pullback, leg 3, deep pullback, leg 1, pullback, leg 2. Lots of ways to count. Leg 1, pullback, leg 2, bottom 69, pullback, leg 3, pullback, leg 4. And the bar starts to break out 76, 77, 78. But then it goes a little more sideways at the end of the day. So I think today was a challenging day because a lot of people wanted to miss this breakout and they wanted more. So they were short lows thinking we're going back down here, and they did it. But since we're price action traders that understand the market cycle and leg count, we know that if you short par 19, you're shorting, at least know you're shorting past leg 2. And shorting past leg 2 probabilities significantly go down for continuation. Deep pullback, you could start shorting these bars. Deep pullback, you could start shorting these bars. Or if you're into reversals, you can scalp every new low. I don't do that, but it is I don't like talking about things I don't do, but we have to understand what's happening. Whenever there's a new low being made, bears are losing conviction because they know it's better to sell high. Bulls buy low trading ranges, and that creates every new low will create a scalp back to the EMA. New low, scalp back to the EMA. Tries to make a new low, scalp back to the EMA. New low, scalp back to the EMA. Then now it's overextended here. New high. Bulls know that bears are shorting high, so they scalp out. They sell longs, bears short back into the EMA. Look, maybe you buy this bar, then you buy more, scalp out at the EMA. So in channels and trading ranges, people are averaging down. It's a tough day. You got to scalp in trading ranges. You got to be quick, Channels expect 3, 4, 5 bars. Trading ranges, you might get 1 or 2 bars in your favor. So let's go over measured moves real quick, and then we'll talk about gaps, and then I'm gonna go eat some chicken and try and be healthy. 1-to-1, short the high bar 6. That's almost met with the 14 low. And then you see this, and you're stubborn. You say, well, you say these 4 bars got continuation, and these 4 bars should get continuation. Price position, leg count, it's different. However, the delayed second leg, you short the pullback, you short the failed breakout. High 1, look. High 1 in a trading range, opposite regime got faded. So this is a really good looking high 1. High 1s are typically have more sellers above them, and you could use that to try and get short, and you would almost make 1.5R. You make 1R around bar 35. And now you see this, you're like, well, this leg should get a second piece. And I think it should, but how does it get its second piece? It gets its second piece extremely delayed. Let's say the leg stops over here. So in an hour and 20 minutes is when it got its second piece, and it only went 1-to-1. And if you had your limit order set, so that's if you enter right at that close, knowing what you're looking for, you still might not get that 1-to-1 fill. You'd miss it by a tick. Sure, that and things like that make trading range tricky because you see this bar, and you're like, oh yeah, the next bar will tag me in reverse. No, the next bar just opened and sold. Not a single, maybe, well, there's the double top. There was a bull. There was a couple bulls who tried to buy here, but it reversed. You did it. They did not even get their 0.75 profits for 1-to-1. Extremely difficult day. Delete this. 3 bars. Put it at the high of the pullback. Put it at the low of 60. 1-to-1's mat. 1.5 bars mat. But this is a small market channel. So there is technically 3 bars here, so more than 3 bars. Put that to pullback. Stop loss doesn't get hit. 1-to-1 gets hit pretty quick. 1.5 bars hit. 1, 2, 3, 4, 5 trades today for the micro channel gang. And micro channel is just breakout and follow. That's really what we're doing. We're trading the first half of the market cycle. Talk about the gaps and call it good. Small gap here. See how small the gaps are compared to yesterday. Yesterday we had 2 gaps that stayed open here. Yeah, this is actually a really good comparison because now we can see what the gaps are back to back to back. See how these gaps are all staying open, so we know bulls are getting trapped. It takes 3 bars to create a gap. 1 bar, the second bar is the gap, and then the third bar will show you where the traders are trapped and they don't get out, break even. So bulls that buy here, they buy more here, and it never makes it back to the original entry, and that's what creates a gap because they have to sell out of shorts or they're bag holding. So here, okay. And then look here, let's say bar 76 sold off. There would be another gap here. And it keeps selling, but it didn't. So on a smaller time frame, there was a bear bar down here, and that immediately gets closed. So now gaps are getting closed. Today, gaps are getting closed very quickly. Here's a bull gap that gets closed. Here's another gap that gets closed. And then here's a big gap, and it's even a breakout gap above the EMA with a strong bar 22. It gets closed within 10 bars. Another gap here that gets closed. See the difference? So that's why I talk about gaps in the market cycle, because gaps will help us read the context. Anyways, guys, thank you for your time. Thank you for your support. I hope you guys have a very Merry Christmas. 6 days left. I'm going Christmas shopping this weekend. It's gonna be hell, but it's gonna be fun because I'm gonna drink some beer. I don't go to the mall often, but whenever I go to the mall, I have a beer. So all right, I'll talk to you guys later. Merry Christmas. No drinking and driving. That's the cardinal rule. Learn from my mistakes in the stock market and in real life. DUIs are not fun. Have a good one, guys. I'll talk to you later. Bye.